Hello, 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 hello. I'm so sorry I have not been able to upload in the past few days. Today we will be doing your audit of banks. So we have already done with all of these chapters. All of your standards have already been done. We have also done your audit planning. Of course, each chapter has your mnemonics, that is the Ratta, so that you are able to learn. So we've done all of these chapters. Now today we are doing your audit of banks. Now if you see, your audit of banks comes for 5 marks. In the past 7 attempts, it has always come for 5 marks. So please also expect that this will be coming for at least 5 marks in your paper. Okay. So, as usual, I have again made the mnemonics. So, in this chapter, all our mnemonics will be related to food. So, your all mnemonics will be food themed. So that it is easier for you to remember and you do not mix mnemonics between chapters. Okay. So let's start with the chapter. So your audit of banks in your ICI module is approximately for 63 pages that I have summarized in approximately 8 pages. So starting with special audit consideration. So while auditing a bank, you have to make some special considerations. Why? So that here are the reasons. So there are special audit considerations because first of all, the nature of risk associated with the transaction. All of these transactions involve money from one person to another, from bank to a customer. So therefore, these have very high risk. Second is scale of banking operations and resulting exposure. There are thousands, lakhs of transactions daily in a bank happening. So therefore, the scale of operations is huge. It is very vast. Next is your excessive dependence on IT to process transactions. Of course, your banks are all automated. Nobody does entries by hand or entries in book. Everything is automated. Most of it is automated. So of course, there is high dependence on your IT systems. Next is effect of statutory and regulatory requirements. Since your bank has your public money, therefore there are a lot of regulations that the law has imposed on them, so that it ensures that both the public money is kept safe. Next is your continuing development of new products which may not be matched with your accounting principles and audit practices. So because there are new products, the bank may come up with new products, and now these new products may not have already pre-established as to how you have to account them, what entries you have to pass, or how the auditor should check them. Therefore, in such a case, because of these reasons, auditor has to take special audit considerations. Okay. So the key to remember this is on page 9 in my PDF. Great. That is your special audit consideration because so the key is send desert samples right now. That is SDSRN. 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 Send desert samples right now. So your S is scale of banking operations, then D is dependence on IT. So SD is done. Now what are we left with? We are left with SRN. SD is done. SRN. S is your statutory and regulatory requirements. R is your nature of risk, and N is your development of new products. Okay, so in your SDSRN, S was your scale, D was your dependence on IT, then your S again was your statutory and regulatory requirements, your R was your risk, so that is your nature of risk, and your last N, that is development of new products. Okay, so it is all related to foods, our entire chapter, and this again mnemonics I have made it in approximately 5 to 6 pages. This will be your last day revision. You only and only have to learn this, and you have to write your own points over and above this. So next is your legal framework. That is what legal framework, what regulatory framework, what laws are applicable to the banks. So you have first of all your Companies Act 2013. So how will you remember this? This is in law. Okay, we studied this in law. Then your PMLA and SURFICE, these are in eco law. Okay, so these are your three acts. So your Companies Act, your PMLA, and your SURFICE. These three laws are applicable to the bank. Okay, now what other laws will be applicable? Your bank's PAPA, that is your RBI. So that is your RBI Act 1934 will of course be applicable to them. Now if their Papa's law is applicable, their law will also be applicable to them. So that is your Banking Regulations Act 1949. So one is from law, two is from eco law, one is from your Papa, that is RBI, one is from yourself, that is your banking regulations, And last, as we already discussed, that your banks use a lot of IT systems. So therefore, Information Technology Act 2000, this also becomes applicable to them. Great. So let's see what key we've made for this. So that is your crisp bread. Okay. CRISP and B. These are your 6 laws. CRISP and B. Crisp bread. Okay. So legal framework. So C stands for Companies Act. Your R stands for Reserve Bank of India. I stands for Information Technology Act 2000. Your S stands for your SURFICE. P stands for PMLA. And your last B, that is of the bread, stands for Banking Regulation Act 1949. Okay, so crisp bread. So your first key was send dessert samples right now. Second is your crisp bread. Now, auditor is in case of different types of banks, auditor is appointed by different people. In case the auditor is of a banking company, so auditor of banking company will be appointed in the AGM. When we say appointed in the AGM, this means it will be appointed by the shareholders. If it is a nationalized bank, then it will be appointed by your BOD. Your BOD stands for your board of directors. If it is SBI, so in case of SBI, it will be done by your CAG. I hope everybody knows what CAG is. CAG along with your CG consultation. So it will consult with CG and then appoint. Okay. And regional rural bank. Regional rural bank is your basically RRB. That will be done by the bank plus your CG approval. What you have to remember, what point of difference is here, that in SBI, that is your State Bank of India, in SBI it is CG consultation, but in your regional rural bank it is CG approval. So please pay focus on what words are being used. Okay, so auditor who, which, where is appointed by whom. If you want, you pause the video, read this carefully, and then you move forward. Okay, you can watch this video at the speed of 1.25. I think that would be comfortable. But pause the video. Do not just watch it for the purpose of watching. Pause it. Try to learn it while you're watching the video. Otherwise, there is no point to watch this video. Okay. So next is you're conducting an audit. So there are stages of conducting an audit. So it will start with the initial consideration. That is, first you will get to know. You will get to know what all have to do or what all formality they have to do. And it will end, of course, with the reporting. Whenever you are auditing, your end result will always be the report that you have to prepare. So your initial first, it starts with your initial consideration, that is your stage one. Second is your understanding. You will get an understanding of the client or what area you have to perform. Third is your risk assessment. Once you've understood everything, you have to determine that, boss, where does the risk lie? Where does the risk lie and what audit procedure should I put for it? Fourth is your execution, that is when you will actually do the work. And fifth is your reporting, that is based on what work you have done, what you want to express, that will be put in the reporting. Okay, so these are your five. So first of all is initial consideration. Okay, try not to go in the key, because in the key I've shuffled, but you have to make sure that since it is stages, you cannot shuffle these. So therefore it has to be done in 1, 2, 3, 4, 5 only. You cannot write reporting first. Okay, so first is your initial consideration. Okay, now first you've already done initial consideration. What will you do next? Now you will understand. You will understand the audit. You will understand the client. You will understand what work you have to perform. That is your understand. Now your third was your risk assessment. You will identify that, oh, over here, over here, over here, these are my risk areas. So that is your risk assessment. Then fourth was your execution. That is when you will actually be doing the audit. And fifth is your reporting. Okay, so it is IURER. Okay, so in case of initial consideration, it is acceptance and continuance. That is in case you are already or if you are already auditor previous year, and this year you are continuing the audit, so therefore it will be called continuance. And acceptance is when you are accepting an audit for the first time. Next is declaration of indebtedness. If there is any indebtedness to the audit, to the client that you are auditing, that you will have to declare. Next is internal assignments in bank by statutory auditors. If apart from your statutory audit of the bank, there are some other assignments also that you are handling. So in such a case, all of these you will have to consider before accepting an audit. Then you know that is your terms of audit engagement. All of this has to be discussed before entering into the audit. Next is communication with previous auditor. If the previous auditor had left due to some reason, so you have to first communicate with them that, boss, why did you leave? Is there any reason? Then of course your planning and establishment and engagement team, because you will need people to do an audit. So you need to gather people, you need to gather an engagement team. So the people who will do the audit is called the engagement team. Okay, so all of this was in your initial consideration. Now in your understanding part, in your understanding, you will have to understand the bank and its environment, the bank that you are auditing and the environment that it operates in, legal, regulatory, all of that. Next, understand the bank's accounting process, that is how they pass entries, what processes they follow. You have to understand that, boss, how do you do this? Because if you want to conduct an audit, first you have to understand what they are doing. And third is understanding the risk management process, that is the risk management, that is the bank itself, how are they managing the risk? Of course your business will have risk, but how is the bank managing those risks? So you have to understand their risk management process. So this was your second stage. Now we already did one, that was your initial consideration. Then we did second was your understanding part. Now once you've understood, what will you do? You will do risk assessment. Perfect. So that is risk assessment. So identifying and assessing, ROMM is risk of material misstatement. So your material misstatement, what is the risk of having a material misstatement? You have to identify that. Assess the risk of fraud. You have to check that, what is the probability that there is a fraud in the company, that is the bank. Assess specific risk. If there are any other specific risk, assess those. And that is risk associated with outsourcing of activities. What banks usually do, they keep the core activities with themselves, and all the non-important activities they outsource it. That, boss, you do this payroll, you manage this. I will not be doing all of this. My main agenda is to give loans and accept deposits. So therefore, if you have outsourced any activities, you have to check that, boss, is there any risk? Because the third party is doing these activities, and now of course they will affect your financials as well. Okay, next is your execution. In your execution, first is your engagement team discussion. That is the people who will be doing the audit, the engagement team. You will have to discuss. You will have to divide work. You will have to coordinate with each other. So therefore, it is engagement team discussion. Second is prepare response to the assessed risk in stage 3. In stage 3, you have already checked that, boss, over here, these are my risk areas. Only identifying risk areas is not helpful, correct? So you have to also check that, how am I going to respond to this? What actions I'm going to take? What audit procedures am I going to do to check these risk areas? Third, establish audit strategy. You will determine your audit strategy, that, boss, how much time, what place, where I'm going to do what, who is going to do everything, that will come under audit strategy. Next is your audit planning memorandum. You will make a plan as to what all is going to happen. Next is your determining materiality. You will be determining materiality as a portion of amount. That is, what is my materiality? I have to look at figures above this. So that also you will have to do for company as a whole. Next is your consider going concern. So your going concern is your SA 570. So you have to check whether the going concern assumption of the bank is valid or not. This was your execution. So first, what did we do? First, we did initial consideration. Then second, what did we do? Second, we did understanding. Now after understanding, you will do risk assessment. Okay, now we have done all the risk assessment also. Now you actually do the work, that is your execution. So we did fourth, execution, and now fifth, we are doing reporting. So this is your stages of conducting an audit. Please, I'm trying to repeat it again and again so you remember. So fifth is your reporting. So that is independent auditors report. Next is your long form audit report, which also you call as LFAR. For those who have done their articleship in statutory audit, you will be knowing what LFAR is. Then next is your report any other matters to the bank or regulator or government. So bank, so you have to tell all the regulators that are concerned with this also need to be informed, or the government. Okay, so these were your stages of conducting an audit. Now your next is special considerations in IT environment. Remember, we have already done a special consideration, but that is special considerations because, that is, we have to take special considerations because of what? If you remember, we did the first part over here, special considerations because, and these are the factors. Now what we are doing? We are doing the special considerations themselves, special considerations in an IT environment. So overall review of IT systems taken at head office level. Bank should share detailed information with auditors. So the bank should share information with auditors. Information, which information are you talking about, sir? So first is your overall IT policy structure and environment of IT system. So overall IT policy that is being used was structure and the environment, basically a rough idea, giving them everything, that was, this is the software we use, this is this data we use, and this is how it happens. Next, data processing and interface under various systems. How data is processed when information is put and how data is processed. Next is your data integrity and data security. Data integrity, so that there is no mismanagement with the data, there is no manipulation. So that is your data integrity. Next, business continuity plans and disaster control plans. In case of any disaster, in case something happens, what is your plan? Next, your accounting manual and critical accounting entries, their processes and involvement of IT system. So critical accounting entries and how they are processed. Next is your controls over key aspects, use of various account heads, expense booking, overdue identification, etc. Controls on recording of various e-banking and internet banking products and channel, that how your e-banking products have been recorded. Next is your MIS reports. MIS reports is your management information system reports. So these reports give information to the management, a quick overview of how things are happening. So MIS reports being generated and their periodicity. Periodicity is how frequently you are generating. Is it a daily report? Is it a weekly? Is it monthly? Is it annually? Is it biannual? How? What is the periodicity? Next is process of generating various information. That is what process is being followed. So these are your special considerations in your IT environment. So I have also made a key to learn this. So we have already done special audit considerations. We have done legal framework. We have done stages in conducting an audit. So over here I've put the key IURER. This is what you have to follow. Okay, this is the order you have to follow. That is your initial consideration, understanding, risk assessment, execution, and reporting. Okay, now your next that we did are special considerations in IT environment. Special considerations in IT environment is the key is CDD IDC MRP. CDD IDC MRP. CDD IDC MRP. Now your CDD is your craving delicious dumplings. Dumplings is nothing but momo. So are you craving delicious dumplings? I don't care. Make red pasta because I feel like having pasta. So CDD, craving delicious dumpling. IDC, that is I don't care. Make red pasta, that is your MRP. CDD, IDC, MRP. CDD, IDC, MRP. What is this answer to? This is the answer to special considerations in an IT environment. Special considerations in IT. This IT should be capital. Okay, CDD, IDC, MRP. So CDD is your critical accounting entries, your data integrity and your disaster control plans. What did I say? Critical accounting entries, data integrity and your disaster control plans. Then what did I say? IDC, that is your I don't care, that is your IT policy infrastructure, data processing and interface. And C is your controls over key aspects. Okay, that is your important aspect. CDD, IDC, MRP. CDD, IDC, MRP. We have done CDD, we have done IDC. Now we are on MRP. MRP was your MIS report periodicity, remember? Then we did recording of various e-banking products. And last is your process of generating information. CDD, IDC, MRP. CDD, IDC, MRP. While you are writing the exam, I want that in your brain my voice echoes. Okay, so we are done with special consideration. Next is your key security control aspect for auditor. What is the important security control with respect to an auditor? So he has to ensure that authorized, accurate, and complete data is made available for processing. That is the main basic data that you are using. That should be accurate. There should be no manipulation in that. Next, ensure in case of interruption due to power, the system restarts without distorting the entries and record. That is, in case the power goes, all the entries that I had already put in, they should not be affected. Okay, so therefore the restarts without distorting entries. Next, ensure that the system prevents unauthorized amendments to the programs. Any unauthorized changes should be not allowed. Next, verify that changes made in parameters or user levels are authenticated. Any changes that you make in the parameter, that is who is allowed access to what or anything, that is your master data, all of that should be authenticated. So what you remember, your second point also talks about authorization. Your third point also talks about authorization. Now, what does the fourth point says? Fifth point says, verify that the account master is your basic main account, and balance cannot be modified, amended, altered, except by authorized personnel. So your third, your fourth, your fifth, all these third, fourth, and fifth point are related to authorization. So verify that the account master and balance cannot be modified, amended, or altered. They all mean the same, except by authorized person. That is only the person who is allowed to shall be able to do that. Next is verify that balance in general ledger tallies with balance in your subsidiary book. So your general ledger and subsidiary book should tally. And last is verify that all general ledger accounting codes are authorized by head office are in existence in the system. That is, on all the codes, verify that all general ledger account codes, so all your GL ledgers, that ledgers that you used to make in school, in classes. So your companies also, your banks also have these ledgers. So all of these ledgers have a unique number. So verify that all general ledger accounting codes, that is your called code, authorized by head office are in existence in the system. That is, they should exist in the system. Otherwise, if you pass any entry which is of that ledger which you have not put in the system itself, it will bounce off and it will give you wrong statements. Okay, let's see the key that we made for key security control aspects of auditor. Okay, so your key security control aspects for auditor is your egg scar. Okay, if someone throws an egg on your face, you will get a scar. That is your egg scar. So key security control aspects for your auditor. Egg scar. What is it? Egg scar. E stands for ensure accurate and complete data is processed. G stands for that your general ledger tallies with balance in subsidiary book. General ledger and subsidiary book. Next, G stands for general ledger accounting codes are authorized. All authorized by HO. X should exist. Egg. Now next is your SCAR. S stands for system prevents unauthorized amendment. This started with your authorization. Next, changes made in parameters are authenticated. This is your second authentication. Third, account master and balance cannot be modified except by authorized personnel. This is your third authorization. And your last, I don't know if you're able to see, now you must be. Last is restarts without distorting entries. So in case of power failure, it should restart without distorting entries. So key security control aspects. What are key security control aspects? It is your egg scar, that is 7 letters. Great. Okay, so let's move forward. So we have, so just starting quick revision. First we did special audit considerations. Why special audit considerations? Because then we did what legal regulation framework are applicable. Then we did in case of which banks who appoints the auditor. Then conducting an audit, we did 5 stages. I hope you remember. Then we did special considerations in your IT environment. So by the time you write your exam, you should close your eyes and you should be able to memorize that this is written over here, this is written over here, this is written over here, this is the key for this, and a complete image should be made in your mind. Okay, so next is a special consideration in IT environment. We did that. Then we did key security control aspects for auditor. This was your XCAR. Okay, now next is your internal audit and inspection. So internal audit and inspection. Risk assessment process includes that is your RAP. So that is identification of inherent business risk. Inherent business risk, that these risks exist in the business. That is on the industry as a whole. It is a business risk only. You cannot remove this risk. It is not due to operations of the business. It is not how they are operating. It is the risk of the business itself. So identification of inherent business risk in various activities undertaken by the branch. This is called your business risk. Second is assessment of effectiveness of control system, effectiveness of control systems of the branch for monitoring inherent risk. So for monitoring the business risk, the risk that already occur, what controls they have put place, whether those controls are working effectively or not, this is checked by your control risk. So your control risk checks the business risk. Okay, now your third point. So there is business risk, then business risk is checked by your control risk, and now the third point will be a mixture of both of these. That is making an assessment of level of overall business risk and control risk. So now you are making an assessment of both business risk and control risk. And last is drawing up a risk matrix taking into account factors, that is risk of branch. So you will make a matrix. But what is a matrix? Basically, you will first determine this is the area. Then you will determine these are the risks. Then your third will be who is responsible to check that these risks do not affect the business. Then what controls are put in place? How effective are they? Whether they are effective or not? How how important are they? High, medium, low. All of this is in a risk in a RCM. It is called your risk matrix. Okay, so this is your internal audit and inspection. Clear? So 4 points we did. First we did business risk, then we did control risk, because control risk checks your business risk. Business risk, control risk. Okay. Now after control risk, what did we do? We did both of them. That is, you will assess how effective both of them are. You will assess the overall level of business risk and control risk. Okay, and last is drawing up of risk matrix. So if you see the key, it is BCAD. Okay, please write it in this format only. The way you can easily do it as ABCD, but for a reason, because they go line by line. So therefore your first is B for business risk, C for control risk, A is for assessment, and D is for drawing up your risk matrix. Okay, now there are some areas where they have specified that internal controls, what internal controls should be checked, or what each place, what each area of business should have internal controls. So I have put all of these in one page. All of these will be covered. Your entire internal controls area will be covered in one page. Then later, all the verification of assets also. I've put this in this format so that you can easily learn this. Okay, and if you are watching this during your exams and you need these notes, so hard copy will not be available that time. So place your order for soft copies and that will be emailed to you. Okay. Now your next is internal control in your selected areas. What internal control should be there? Okay. So your internal controls are basically, so I will cover three internal controls. There are a total of 9, I think. So after every 3, we will check what key we have made for this for learning purpose. So if you do not want to understand, only want to learn, you can skip in the forward part to only to check the key. Okay. So in case of so first we will be doing general, second we will be doing cash, and third we will be doing clearings. So general, what general internal control should you have? So first is your staff. Staff should be shifted from one position to another frequently without prior notice. That means any person doing his job, he should be shifted. He can be shifted to another job without telling him, because in such a case, what happens if he's doing any fraud? He will not have time to rectify that, and it will be checked by another person. Next, work of one person should be checked by another person, usually by an officer. This is called your maker checker. Work of one person checked by the other person. Next, arithmetical accuracy of the book should be proved independently every day. Arithmetical accuracy is your mathematical calculations, your totaling, your carry forwarding. All of these, there should be no issues. Next, all bank forms kept in possession of an officer and another responsible officer should verify. All the bank forms should be kept with one officer, and another officer should verify that, boss, you had 100 at the start of the day, you issued 13 forms, so you should now have 87 forms, not less, not more. Okay. Last, the financial powers of officers of different grades should be clearly defined. That is, what officers have what power, they should be determined in a proper policy. So this was your general. So it spoke about staff, then it spoke about maker checker, different person. Then it spoke about the mathematical accuracy, that is your arithmetical accuracy. Then your fourth point was with regards to your physical bank form, and your last part was with regards to powers of the officers. Okay, we will learn the key also. First, we'll do your 2 and 3, then we will go to the mnemonic, the Ratta part. Okay, so cash. Cash should be kept in the joint custody of two responsible officers. Two responsible officers should be holding cash, not one person, because this is a high risk area. Second, actual cash in hand should agree with the balance shown in the day book every day. That is the day book that is maintained, that is plus minus that you do. That balance should actually physically verify with how much cash you have. This should be done on a daily basis, that is every day. Next, receipt and payment totals. Receipt and payment totals should be compared with the cash column of the day book. Okay, so in day book there are two references. One is cash in hand and second is your receipt and payments total. Next, it should be test checked daily and counted by responsible officer other than those handling cash. So test checked daily and counted by responsible officer other than those handling cash. So these two people that are handling cash, these will not be allowed to total it. Okay, next, the counterfoil of cash receipt vouchers. Counterfoil is basically your copy of cash receipt vouchers signed by an officer in cash department plus your cashier. So it should be signed by two people. One is officer in the cash department and second is your cashier. Okay, so first we did your general internal controls. Second, what did we do? We did internal controls for cash, and third we are going to do internal controls for clearings. So clearings is basically when any check is issued, those check is cleared by the bank. Therefore, it is called clearings. So electronic image of the check transmitted to paying branch eliminates the associated cost of movement of physical checks, reduces the time required for their collection. So electronic image of the check transmitted to paying branch. That is, check is not physically sent, but it is scanned and it is sent to the paying branch. Next, branch shall call or email customers for any check that they have received of amount greater than 5 lakhs. So if the check has been received from that customer, you should call or email them that, boss, are you sure? Is this you? Have you authorized this? Hey, have you written this check for an amount of greater than 5 lakhs? Because 5 lakh is a big amount. Next, the auditor is to check whether signature of the drawer of the check is being verified by the staff. So if you know in the check you give a sign. Now this bank already has your signature. So what they have to do, they have to compare the sign that you have put in the check versus the signature that you had already given them. Only and only both of these match will the check be processed. Next, unpaid checks received in outward clearing shall be sent to the customers at their recorded address. So, in case of any check that was not cleared, you have to give them back to the customer. Okay, so this was your clearing. So, let's see the key that we made for this. This we already did: business risk, control risk, assess, and drawing up of risk matrix. Okay. Now now we did three internal controls. The first was your general internal control. So your generally where do you order food from? Okay, you order from the Swiggy app. Okay, so therefore general internal controls is my Swiggy MSAPP. So over here it should be, instead of SM it should be MSAPP. Okay, my Swiggy app. M is your maker checker, that is work of one person shall be checked by another. Second is your staff shall shift frequently. This was your first point if you remember. Then we spoke about arithmetical accuracy of your books. Possession of bank form, it should be with your officer. And last is your powers or officer should be clearly defined. Okay, so my Swiggy app, MSAPP, this is your general internal controls. General internal controls is my Swiggy app. Okay, now for cash. So general internal controls we did. Second is for cash. Second internal controls is for cash. Now for cash, just carry cooked tasty rice. Or did I say just carry cooked tasty rice? JCCTR. 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 What does J stand for? Joint custody. Cash should be kept with two people. C stands for cash in hand shall be matched with daily book daily. Another C stands for counterfoil of cash receipt voucher shall be signed by the officer. It should be test checked daily. And R stands for receipt and payment total. This shall be compared with your day book. If you remember, 2 points were with regards to day book. One is this and second is this. So this is also with regards to day books. Okay, so this was your cash. Now your third is your clearings. Your clearings internal control. Okay, clearings was with regards to check. Okay, so what did we do? Your first general internal controls was with regards to Swiggy app, because you generally order from Swiggy. Your cash was just carry cooked tasty rice. And third is your clearings. For clearings, it is you enjoy sugar cookies, either sugar cookies, sweet cookies, whatever, that is UESC. 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 U stands for unpaid checks returned to customers. E stands for electronic check image transmitted to paying branch. S stands for signature of drawer verified. Verified with what? It is verified with your signature book. Okay. And C is your contact customer. How? Either through email or through call. So contact customer if check amount is greater than 5 lakhs. So UESC. You enjoy sugar cookies. UESC. UESC. Okay. Let's get back to the chapter. So we already did three. Now next three that we are doing is your bills for collection, bills purchased, and your loans and advances. Bills for collection, bill purchase, and loans and your bills of collection. Bills of collection, what is your bills of collection? Bills of collection is your bills of exchange. Suppose I drew a bill of exchange on someone. I hope everybody knows what bills of exchange is. I drew a bill of exchange on someone that, boss, you have to pay me. You have to pay me within 1 month. Now this money that I will receive after 1 month, what do? I go to the bank and I give it to them. That, was you collected please on my behalf. So this is your bills for collection. So all documents accompanying the bills. If I have a bill, of course, I will also have an invoice, correct? Because we've entered into a transaction. So everything that is accompanying that bill of transaction, that all documents accompanying bills shall be received and entered in the register by a responsible officer. All of these documents shall be properly maintained. That is bills for collection. When I tell the bank that, boss, at that date you ask him for money, Second, the accounts of customers or principals should be credited only and only after the bills have been collected. That means only and only when that person has actually paid. When that person has actually paid the bank, only then the bank should credit the customer's amount. That is when I gave them the bill to collect. Next, bills sent by one branch for collection to another branch of the bank are not counted twice. This is what are they doing? They are transferring from one pocket to another pocket. This shall not be counted twice. It is only one bill of collection. Okay, so that is your bills for collection. So first was your all documentary evidence they should be having. Then second was credit the customer account only when the bill is actually collected. And your third is from one branch to another branch should not be counted twice. Okay, that was your bills for collection. That is when I told the bank that boss, you collect the amount from him and then you pay it to me. That was your bills for collection. Second is your bills purchased. Bills purchased is when I give them the bill of exchange and I tell them, boss, he's going to pay me after 1 month. The bank asks how much. I say that he's going to pay me 1000. So I ask him that you give me the money today now, and then 1 month later you take from him. So in such a case, what does the bank do? They will give me suppose maybe 800 rupees, because that 200 rupees will be their risk or their interest also. So this 200 rupees, it will be their margin, and I will get 800 rupees today compared to 1000 rupees 1 month later. So the bank has purchased the bill. They have purchased the bill because now they will collect 1000 from him and they paid me 800. That 200 rupees is their income. So that is your bills purchased. So at the time of purchase of bill, verify that all documents of title or documents of title, since the bank is purchasing the bill, all documents of title, that is your ownership, they should be assigned to the bank. Next is sufficient margin should be kept. Sufficient margin should be kept while discounting a bill to cover decline in the value of any security. I give them a bill and I also give them some security that was in case he does not pay, you can sell my security and you can receive the money that you have given me. So they keep a margin. What I told you, 1000 rupees bill, and they give me 800 rupees. That 200 rupees is the margin. This margin is to cover any diminishing in value of the security that I give them. Next, if the bank is unable to collect the bill on due date, that means the person on whom I drawn the bill, he did not pay the bank. In such a case, if the bank is unable to collect, that means he did not pay to the bank, then recover from the drawer against the security provided. I am the drawer, I drew the bill. So therefore, whatever security I have provided to the bank, they will sell that security and they will recover whatever they want to in exchange of that bill. Next, all irregular outstanding accounts should be reported to the head office. All outstanding accounts should be, you should tell them to the head office. Okay. If bills purchased outstanding at the close of the year, if you have purchased a bill and it is still not settled, in such a case, a portion discount between 2 years, because what happens, you have discounted a bill, this 200 rupees that you earned, if it is still outstanding at the end of the year, what does this mean? That this 200 rupees is not your entire income of this year. Some portion will be in the different year also, that is in the next year. So you have to apportion on basis of days. So therefore you will have to apportion discount between 2 years, that is your current year and your next year. So we did bills for collection, we did bills purchase. Now we are doing loans and advances. Of course, this is your main work of the bank, loans and advances. So make advances only after satisfying itself. Make advances only after satisfying itself the credit worthiness of the borrower based on your credit score, on how reliable you are. The banks will decide whether to give you loan or not. So that is your credit worthiness. Second, all necessary documents shall be executed before the advance is made. All necessary documents shall be executed before they advance the loan. Next, sufficient margin. Now see, margin over here is also there. Where else was margin? Margin was in bills purchased. Okay, so if you remember, this was your margin over here, and over here also it's a margin. So sufficient margin should be kept against securities taken to cover any decline in the value. If there is any decline in the value of security that I give them, the banks will keep a margin for this. All securities to be received and returned by a responsible officer. The operation should be reviewed at least once a year. That is, the entire loan and advances operation should be at least reviewed once a year. Okay. So we did 3 areas. Let's see what keys we have made for that. Okay. So your bills for collection, bills purchased, and your loans and advances. This is your 4, this is your 5, and this is your 6. So bills for collection is your Apple Taste Delicious, that is ATD. Account to be credited only once bill is collected. Bill sent to another branch not to be counted twice. Okay, so that is your T. And your D is docs with bills entered in register by officer. Okay, so apple taste delicious. Apple taste delicious is your bill for collection. Bills for collection. Apple taste delicious. ATD. Account to be credited only when bill has been collected. B, T is your bill sent to another branch not to be counted twice, and D is any document they should be entered in the register by the proper, not your proper officer, by responsible officer. Okay, next is your bills purchased. Bills purchased is dad made spicy imli achar. If you since birth, since childhood, your dad has paid most of your bills. So that is bills purchased. Whenever if you see this in exam, bills purchased, you have to remember key is something related to dad. So your dad made spicy imli achar. DMSIA. DMSIA. Dad made spicy imli achar. DMSIA. D stands for documents of title have to be assigned to the bank because the bill has been purchased. Margin should be kept sufficient. Your S is recover against security if unable to collect. That is whatever security I have given to the bank. Any irregular outstanding account will be reported to HO. I have to complain to the HO that these are my irregular accounts. And last is with A, that is bills purchased. Outstanding should be apportioned between 2 years. Okay, so DMSIA, DMSIA, that is your bill purchased. Okay, next is your loans and advances. Loans and advances is my regular dal chawal rice, that is Mr. DCR. Okay, my regular dal chawal rice. Loans and advances. You get the call daily, sir. Do you want a loan, sir? Do you want a loan, sir? आपको loan चाहिए क्या? So in such a case, Mr. DCR, this is your daily, this is your regular schedule. So my regular dal chawal rice. Margin should be kept against securities, same, reviewed at least once a year. D is documents should be executed before the advance is sanctioned. Next, credit worthiness of the borrowers and securities to be received and returned. Received and returned by responsible officer. Okay, so these are the 6 things that we have done for now. Let's go back to the chapter. Your 7, 8, and 9. Okay, now your credit card operation, this came in November 22. Great. So 7, 8, and 9. Okay, so next point is your demand draft. Okay, so demand draft, signatures on a demand draft should be checked by an officer with the signature book. All the demand drafts issued by a branch should be immediately confirmed. It should be confirmed by advice to the paying branch. So the issuing branch gives the confirmation to the paying branch. If the paying branch does not receive proper confirmation, if the paying branch does not receive proper communication from the issuing branch, in such a case, it should be the reason should be ascertained that why we have not received any confirmation. So this was your demand draft. Next is your inter-branch account. So inter-branch accounts should be adjusted on basis of advice received from other branches. Inter-branch accounts, of course, when you are affecting inter-branch accounts, only and only when there is some transaction between both these branches will it be affected. Prompt action should be taken by central authority if any entries, which are particularly debit entries, are not responded to by any branch within a reasonable time. Okay, and your last is your credit card operations. Credit card operations is effective screening of applications. Effective screening of applications, they shortlist, they select which application that they will be doing with reasonably good credit assessments. Second, strict control over storage and issue of cards. Imagine if some credit cards are stolen, people will be able to access it. It is basically free money. There should be strict control over storage and issue of cards. Next, system and prompt reporting by the merchants of all settlements accepted by them through credit card. Merchants is, for example, at any shop you swiped your credit card, those are the merchants. So system of prompt reporting by merchants of all settlements accepted by them through credit card. That means whatever payment they have received. Reimbursement to merchant. What happens? You swipe the credit card, then you pay the bank, then the bank pays the merchant. So therefore the bank is actually reimbursing the merchant. So reimbursement to merchant made after verification of validity of merchant's acceptance of card. The merchant will have to tell you that boss, this person has paid me, please pay me. Next, all the reimbursement should be immediately charged to the customer's account. Whatever reimbursement, whatever you are paying to the merchant, that should be charged to the customer's account. Statements are sent regularly and promptly to the customers. Whatever is happening in their account, these statements should be sent to them. And last is your system to monitor and follow up on customer payment, because in credit card you spend today but pay later. So therefore there should be a proper system to follow up with people that, boss, please pay your bills, please settle this. So there should be a proper system. Okay, so now we'll be seeing what keys we have made for your 7, 8 and 9. Okay, so your 7 is your demand draft. So that is steamy cooked rice. SCRSCR, steamy cooked rice. Steamy cooked rice is your signatures on demand draft to be checked with your signature book. Next, demand drafts issued, confirmed with paying branch. And last is your, if paying branch does not receive the proper confirmation, ascertain the reasons. Okay, great. So what did we do? We did steamy cooked rice, that is your SC and R. Okay, inter-branch account, there is no key because there are only two. First we studied that it should be adjusted only if advice received from another branch. And second point, what we do? Action should be taken by central authority if entries are not responded by any branch. Okay, and ninth we did your credit card operations. Credit card operations, what key is there? Cook secret recipe Szechuan egg fried rice. Okay, cook secret recipe, that is your CSR. So CSR, cook secret recipe. What is your secret recipe? It is my Szechuan egg fried rice. SEFR. Szechuan egg fried rice. CSR SEFR. Okay. So this key I have only made so that if you want to learn it as a mnemonic form, that is your FREX. In FREX, your R is double and your S is double. Okay. So C is control over storage and issue of cards. Second is system of prompt reporting. Then is your reimbursement to merchants. Statement should be sent to customers. Effective screening of applications. If you remember, this was your first point. Follow up with customer payment. This was your last point. And next is your reimbursement chart to the customer's account. So that is your CSR SEFR. Great. So with this, we are done with your internal controls part. Now, next that we will be doing next that we will be doing will be your CRR and SLR requirements. Whew. Okay, so compliance with CRR and SLR requirements. Now, what is CRR? What is SLR, sir? I have studied this once upon a point of time, but now I don't remember. Don't worry. So your cash reserve ratio is your specified minimum fraction, your fraction of total deposits which commercial banks have to hold as reserve, either in cash or deposits with the central bank. So in India, your central bank is nothing but your RBI. So the portion of these deposits that you have to keep with RBI, that is called your cash reserve ratio, CRR. CRR is your cash reserve ratio, what you have to keep with your RBI. So how do you remember CRR and your central bank? C for CRR, C for central bank. Okay. So this CRR is kept with your RBI. Okay. Second, statutory liquidity ratio. You hear the word, it is liquidity ratio. They want you to have some liquid cash. Why? Because depositors will come, the people who have given you their money, they will come that, boss, I need 1,000 rupees, I need 20,000 rupees, I need 3 lakh rupees, I need it for my surgery. Please give them back to me. So you need this liquid amount of money. That means amount of money that you have not extended as deposits. So requirement that every scheduled commercial bank is required to maintain in the form of certain liquid assets. Liquid assets mean easily convertible to cash, such as your gold, cash, government approved securities, before providing credit to customers. Okay, that is your statutory liquidity ratio, that is SLR. Okay, now what are the audit procedures? What are the audit procedures to check my CRR and SLR requirements are being complied or not? So first is understand of relevant circulars of RBI. RBI comes up with relevant circulars determining what is the percentage of CRR to be maintained, what is the percentage of SLR to be maintained, particularly regarding composition of items of DTL. DTL is your demand and time liabilities. DTL stands for demand and time liability. Okay. Branch auditor to send their weekly TB. TB is your trial balance. So branch auditors of the branch, they have to send weekly trial balance as on Friday, and these are consolidated at the head office. So the head office receives TB from all the branches, and these are consolidated to form one TB. Next, examine the consolidations regarding DTL positions, demand and time liability positions prepared by bank with respect to the returns received from branches. As we said, all the branches send them, then they consolidate. So now what you are doing, you are examining the consolidations regarding your DTL. Next, examine whether the valuation of securities done by the bank is in accordance with guidelines of RBI. RBI also gives your guidelines with regards to valuation of security. So you have to check whether that is in place or not, and whether they are following it or not. While examining the computation of DTL, that is how it is calculated, make sure, examine that there are certain items that have to be excluded and there are some items that have to be included. So excluded from liabilities is your RAMU. So RAMU is excluded and NAI, that is NAI. NAI is included. So your RAMU is your RAMU, and your N, A, and I, these are your included. So R is your recovery of bad and doubtful debts. That is your R. This has to be excluded. Then your A is amounts received in Indian currency against import bills. Amount received in Indian currency against import bills. Amount received in Indian currency against import bills. That is your A. M is margins held and kept in sundry deposits. Margin held and kept in sundry deposits. Margin held and kept in sundry deposits. And U is unadjusted deposits. So this becomes your RAMU. So what is R? R is recovery of bad and doubtful debts. What is A? Amounts received in Indian currency against import bills. Okay. M is your margins held in sundry deposits, and U is your unadjusted deposits. So this is also deposit. This is also deposits. Okay. So in RAMU, M, U both are deposits. Okay, now what items are to be included? So NAI is to be included. That is net credit balance in branch adjustment account. This has to be included. Next, adverse balance in Nostro mirror account. If you know, there are two types of accounts. In SFM also you must have studied. In Eco also you must have studied Nostro and Vostro account. So adverse balances in Nostro mirror account, that has to be included. And last is your inward remittance received on behalf of customer. If the customer has received some money and you have accepted on behalf of the customer, of course it is your liability, correct? It is not your money. You have to pay this to the customer. So therefore, any inward remittance received on behalf of the customer, this will be included in your liability. Okay. Whether the consolidations prepared by the bank include relevant information in respect of all branches, that is whether all branches have been included or not. Whether interest accrued but not accounted. Interest accrued is basically, for example, if you gave a loan of 10%, you gave a 1 lakh loan at 10%, and you told them it was pay me after at the year end. So 1 lakh 10%, that will be how much? 10,000. So you will get 10,000 at the end of the year. Now after 3 months, this interest, it is accrued but not received. Okay, so therefore interest accrued but not accounted, you will not account it in the book, is included in computation of DTL. So that you have to check. And last is auditor should specify the number of your unaudited branches. How many branches have been remain unaudited? So he has to specify that number of branches remaining unaudited and state that he has relied on the returns received from unaudited branches in forming an opinion, because these returns that the branches, this is consolidated. So he has to say that the branch is not audited. You have to specify this. Okay, so these were your audit procedures. Now let's see what key we have made for this. Great. So your audit procedures for CRR and SLR requirements. So I cut cubic vegetables. That is I C cubic V. I C cubic V. I C cubic V. I cubic vegetable. That is an audit procedure with regards to CRR and SLR. Okay. How do you remember this? Now this, when the banks keep something with the RBI, it cuts their ability to extend more loans, correct? So therefore the key you can remember, it is I cut cubic vegetables. I C cubic V. I C cubic V. Your I stands for items included and excluded. That is your Ramu and Nai and Ramu. Items included and excluded from your liabilities has to be examined. Consolidations prepared includes information of all branches. Consolidations regarding your detailed positions need to be examined. Unaudited branches specify the number. This is the last point that we did. Branch auditor to send their weekly trial balance. interest accrued not received included in computation of DTL. This also point we did. Circulars of RBI to be understood. This was the first point if you remember. And valuation of securities as per RBI guidelines. So if you see in your C and V are both related to your RBI. Okay, so I cut cubic vegetables. I see cubic V. That is your CRR and SLR requirement. This is a very important question. Make sure you definitely learn this. Okay, so let's go back to the chapter. Now, as we did your internal control, now there is verification of assets. So different type of assets require your verification. So that is your cash and cash equivalent. So in your cash and cash equivalent, there are some areas of focus. So that is your cash balance with RBI, balance with other banks, money at call and short notice. Okay, so these are your four items. That is first of all cash, then whatever balance is with RBI, whatever balance is with other banks, cash, balance with RBI, balance with other banks, and money at call and short notice. That means whenever you want the money, that time you can take money at call. Okay, cash. Physical verification of cash as close as possible to the balance sheet date. That is, cash should be physically verified as close to the balance sheet date. Physical cash balance must tally with the balance in your CBS. So the banks use your CBS, that is your core banking system. So it should tally with that. Okay, now balance with RBI. Ledger balance with bank confirmation certificate. This has to be tallied. Next, review reconciliation statement. Review reconciliation statement with special attention to first is your cash transactions remaining unresponded, revenue items requiring adjustment or any write-off that you have to write off, and third is your other credit and debit entries in the statement provided by RBI remaining unresponded for more than 15 days. That is, anything that you have sent to the RBI that has not been responded for more than 15 days, this has to be reviewed. Okay, so these were your 3 points. Review reconciliation statements with special attention to your 3 points, that is cash transaction, revenue items to be written off, and your other credit debit entries 15 days RBI not responded. Great. Okay, so cash is done, balance with RBI done. Next is your balance with other banks. So ensure no debit charges or credit interest is outstanding. Ensure no check sent or received in clearing is still outstanding. It should not be in clearing. Either you settle it or you return it. Ensure bills sent for collection and outstanding have been credited subsequently. That means later at least you've done this. And examine no transactions have been put through window dressing towards the close of the year. Now you will ask me, sir, what is window dressing? Now, for example, I tell you these banks have to report. For example, there is a rule that these banks have to report if Dheer Modi has not paid interest at the year end, if Dheer Modi's interest is outstanding for more than 30 days. Now, if at the end of the year I see that, oh, my interest outstanding is for 300 days. Now, what do? They have to check at the end of the balance sheet date, correct? That as at the end, if Dheer Modi's interest is outstanding or not. So, in such a case, what will I do? I will take another loan. I will pay off this interest. Great. So now my outstanding amount is zero. But now I have another loan standing, correct? So I have only window dressed it. I have only to come out of that obligation, to come out of that situation. I have done something here and there, something tipsy. So that is called your window dressing. And last is your money at call and short notice. So whether there is proper system of authorization for lending of money. All loans to be verified with certificates. Any call loan, they should be verified with certificates of the borrower and the call loan receipt held by the bank. So this has to be verified with certificate and receipt. This certificate is with the borrower and this receipt is with the bank himself. Next, examine subsequent repayments received from borrowing banks to verify the amounts shown under this head. Any subsequent repayment received from your borrowing bank, the bank who took money. Any subsequent repayment, that is whatever they have made, you have to check whether this is being showed under this head or not. And last is verify that the interest has been properly accrued and accounted. Your interest should be properly accrued and accounted. Okay, so this was your verification of assets with regard to your cash and cash equivalent. These are very small points. So I have made keys for this also. Don't worry. Your cash and cash transactions area of focus. So we did for money, other verification and RBI balance. Now verification of cash balance with RBI balance with other banks and money and call short notice. All four of these, all points I have included over here. So I am not getting into very much detail. These mnemonics you also get on the Telegram channel. Link will be in the description below. Okay, so you don't worry, I'm not getting too deep into this because these are very small parts. So verification of assets, we are done with your cash and cash equivalents. Now your second is your investment. So in investments, your area of focus, that is your internal control evaluation and review of the investment policy. So all these banks have an investment policy, where to invest, how much to invest, which grade securities, all of that will be evaluated. Separation of investment functions. So separation of investment functions from front, middle and back office. There are three functions. This has to be segregated. Examination of reconciliation. So reconciliation of what? Of investment account, your physical securities in hand and the third party confirmation. That is if any securities are held with the third party. Okay, so you have to check that both in my investment account and my investment ledger, what is the amount and what is the actual physical, what is the actual physical investment that they have. Examination of documents that investments are made by the bank are within its authority. That means it is allowed to. Physical verification, verify investment scripts on your balance sheet date. Examination of classification and shifting. So entire investment portfolio to be classified into your HTM, HFT and your AFS. So it has to be classified into three categories. Okay. Next is your examination of valuation. Examination of valuation. First point, whether method of accounting is appropriate or not. That means whatever accounting I'm doing. For example, whether I'm doing it at historic cost or whether I'm measuring it at FBT PNL or FBT OCI. So my method of accounting is appropriate or not. Next is whether properly classified into three categories. Which three categories? HTM, HFT and AFS. Okay, next, compliance with RBI guidelines. Of course, your valuation will also be given by your RBI guidelines. Whether non-performing investment has been classified as your NPA. Whether income from asset is properly accounted for. Adequate disclosure for change in valuation method. If earlier I used to do it on historic cost and from now this year onward I am doing it through FPT PNL. So I have to give whether adequate disclosure has been made for changing the valuation or not. Profit loss on sale calculated and accounted properly. Profit and loss on sale, that is whenever you are selling the investment, whether that is calculated properly or not. Your X interest, come interest, all of that you have to check. Dealing in securities on behalf of others. So when for someone else you are dealing in securities, so whether prior approval for carrying out such dealing has been obtained, because you are doing it on behalf of someone else. Special purpose certificates relating to investments. Any special purpose certificates relating to investment. That is whether bank is maintaining a separate account for investments on their own investment account. That is the money that they are investing of their own. For on their own investment accounts, your PMS, that is your portfolio management services, portfolio management service clients, and on behalf of other constituents. So all of this has to be bifurcated, that both this amount I am investing mine. Then there are your PMS clients, where these people they give money to the bank and the bank invests it on them or their behalf. So that is your PMS clients and on behalf of other constituents. Okay, so there should be proper bifurcation. This was your second uh, verification of asset, that is your investment. Now your all these keys are uploaded. So if you want the keys, you can download it from the Telegram channel. This is a pretty long chapter, therefore I'm not getting very much into the keys as we have a lot to cover and I don't want to waste your time. Okay, now your next is your advances. Advances, your area of focus. Your area of focus, so basically there is evaluation of internal control over advances. That is what internal controls are there on my advances. What are my substantive audit procedures? That is your SAT. And third is recoverability of advances. Okay, so evaluation of internal control over advances. So examine that advances are sanctioned according to the delegated authority. Okay, that means only the person who is allowed to do, whether that person has sanctioned or not. Whether laid down procedures regarding credit appraisal is being followed or not. Examine all necessary loan documents have been executed after sanction but before dispersal. So after sanction but before dispersal. Sanction is allowed and dispersal means actually when you are transmitting the amount. Examine compliance with stipulated terms of sanction and end use of funds. That is for whatever purpose that person has taken the loan. For example, if he took a education loan, whether this education loan that he took, whether he has actually paid that amount to the university or not. That is your end use of funds. Examine validity of the recorded amount. Whatever amounts have been recorded, are they correct or not? And examine whether system laid down in bank for review and renewal of advances being followed. Whenever you want to renew an advance, there will be certain procedures that have to be followed. So check whether those are being followed or not. So this was your internal controls. First is your internal controls, second is your SAP, and third is your recoverability. So your SAP, that is your substantive audit procedure. Verify that each customer of bank is tagged under a single customer ID, because you and I can have the same name. There can be two Aditya Sharma, there can be two Ritvik Godhas, but your each customer should have only one customer ID, single unique customer ID. Examine all large advances. Examine all large advances while other advances may be examined on a sample basis. That means you can take every 10th transaction, every 50th transaction, but large transactions all should be verified. Verify correctness of master data of loan accounts updated in your core banking system, that is your CBS. So master data, that is your main data. Verify completeness and accuracy of interest being charged. Carry out appropriate analytical procedures. Carry out appropriate analytical procedures. And last is ensure that restructuring any loan, anything that is restructured, you have to check whether it is as per the RBI guidelines or not. So first we did internal controls, second we did your SAP, that is your substantive audit procedures, and next is your recoverability of advances. So review periodic statements submitted by borrowers, because these borrowers, if you give them to the business, they also have to give you a statement that was how their business is doing. Review latest financial statement of borrowers. You have to check their financial statements as well. Review reports on inspection of security, that is what are security they have provided. You also have to check their reports and reviews. So all four are reviews. So one you check report on inspection of security. Next you'll check auditor's report in case of borrower having credit facilities beyond the cutoff limit. So if you give them a credit which is more than the cutoff limit, then you will also check their auditor's report whether everything is good at their end or not. This idea you will get through the audit report. Okay. Then your next is your asset classification, income recognition of and NPA. So in this, your classification and provision, that is whether classification of advances is through CBS without manual intervention. All of that should be automated. There should be no manual intervention because there is scope for mistake. Whether the secured and unsecured portion of the advances have been segregated correctly, because this you will have to show separately. Accounts regularized near balance sheet dates. You regularize your attendance, that is you go to the system and you change something. So accounts regularized near balance sheet date. That means if your account was outstanding since a long time and just near the balance sheet date, you made it okay, and after the balance sheet date again it has gone back to the old problem. So account outstanding amount paid before balance sheet date not to be considered as NPA. If, however, if the bank lends more funds later, check whether repayment was genuine or not. For example, I owe the bank rupees 5 lakhs. For example, I owe the bank rupees 5 lakhs. This is outstanding at the year end, and I don't want that I come in the outstanding list. So what do? I ask the bank for another loan. I ask them for another loan of, say, suppose 7 lakhs. And out of those 7 lakhs, I pay them 5 lakhs loan. I repay my old loan. So what I have done, I have regularized my loan. So in such a case, I have taken 7 lakhs to repay a 5 lakh loan. So what have I done? I have not made a genuine payment. I asked them for money and I paid them back. So this is not a genuine payment. Next is drawing power calculation. So ensure that it is calculated as per guidelines formulated by your BOD, that is your board of directors. Drawing power means how much money you can borrow. Calculate carefully in case of working capital advance to a construction company. So you have to check what is the drawing power. That means what is the maximum amount of loan that you can give them. So first is calculated as per your BOD, and second is working capital of loan to construction company you have to check. Okay. Classification to be borrower wise, not facility wise. Your classification that you are making, it has to be made borrower wise. That is based on different parties that you have given them, and not facility wise. That means not on the type of loan that you have given. So ensure that all facilities granted by a bank, facilities basically whatever amount you have given them to a borrower will be NPA and not a particular facility. That means if I have given a particular borrower some, say for example, 6 different types of services, that is nothing but facilities, nothing but services. So ensure that all facilities granted by a bank to a borrower will be NPA and not a particular facility. This means if I have given them 6 service and if he is coming under the category of NPA in any one of them, all 6 of them will be called as NPA. Okay, so therefore they are saying it should be borrower wise and not facility wise. That is not service wise. Government guaranteed advances. So government guaranteed advances, if the government guarantee that boss, if he does not pay, don't worry, I will pay you. So if NPA, interest not to be treated as income, if that asset has already been recognized as an NPA, interest shall not be treated as income till it is realized, that is till you have received it. Advance will be NPA only and only if your CG, remember it is only CG, it is not your LG, it is only central government repudiates its guarantee. Advance will be NPA only if CG repudiates its guarantee. That means if CG say that boss, I'm not going to honor this guarantee, I'm not going to pay. That means they have repudiated their guarantee. In such a case, this advance will be treated as NPA. Okay. Next is upgradation of account. Check whether any account has been upgraded from NPA to standard. That means earlier it was an NPA and now it is a standard. So you have to check how come. How come? Is there anything happening over here or is there a genuine conversion? Okay. Next is your NPA sale and purchase, your non-performing asset. That is, for example, what happens? Suppose I lent you rupees 1000. Okay. Now you are not paying. You are a NPA in my book. What do I do? I have asked you, sir, please pay, boss, please pay. You are not paying. So in such a case, I get tired and I sell you. I sell your loan to another person. That boss, you take this. I gave him a loan of 1000. Instead of 1000, you just give me 300 rupees. And now you trouble this person for the money. So I am selling the NPA. Okay. So only such NPAs have been sold which have remained as NPA in books for less than 2 years. Okay. Next, NPA to be sold without recourse only. NPA to be sold without recourse. This I think instead of less than, it should be more than 2 years. Okay. Next is your NPA to be sold on cash basis only. Okay. No credit basis. Bank cannot purchase NPA that it had originally sold. If I had sold you and then I cannot repurchase you later. So bank cannot purchase NPA that it had originally sold. Capital adequacy, any NPA purchased to have risk weight of 100%. So we will be studying capital adequacy, don't worry. So if I am purchasing any NPA, the risk weight will be 100%. That means 100% risk that I will not receive the money. Loss on sale has to be debited to P&L. However, gain on sale will be adjusted with loss of another. Suppose I sold 2 NPAs. In one NPA I made a loss, in one NPA I made a gain. So does this mean both of them have to put in P&L? No. The one that I put. So first my gain will be set off as my loss. If I still have a loss, then only it will be transferred to P&L. Okay, this was your NPA. Now next is your fixed assets. Fixed assets. So in fixed assets, there is your internal control, then there is your premises, other fixed assets, sale of fixed asset, leased asset, and impairment of asset. Internal control, premises, other fixed assets, sale of fixed asset, leased assets, and impairment of assets. So I'm thinking I'll just show you the pages once so that you are also okay with the keys that I've made. Okay, so all of these are food related. Your investments when we did, so that is document separation of internal control, reconciliation, physical verification, special purpose valuation, classification, dealings. So these sir, please sir, very creamy donor, that is D sir, PSVCD, that is your investments. Then we did your examination of valuations. So we did three categories. Remember, we did it should be classified into three categories. Then P&L on sale calculated properly. That is your profit and loss. Income should be properly accounted. Non-performing investment shall be classified as NPA. RBI guidelines compliance. Disclosure for change. It should be given. Disclosure for change in valuation. And method of accounting should be appropriate. Then we did this advances, that is substantive audit procedures, internal control and recoverability, that is your serve in restaurant. Evaluation of internal controls. Chocolate cookies are always very delicious. Credit appraisal, compliance with terms of sanction, advance sanction by delegated authority, advance of renewal is being followed, validity of recorded amounts, documents executed after sanction but before disposal. Okay, so all of these we have done also. So I just want you to go through these. If you want, I will pause the video. You go through these points, you revise it once again, and then we will move forward. Okay, so we have done it till here. That is your NPAs, sale and purchase. Pause the video, read the keys that I have made, and then only move forward. If you do not have time, you can download this from the Telegram channel also. Link is in the description. Okay, so let's go back to our fixed assets. So this would be your fixed assets. Your fixed asset is your internal control. So control over expenditure on fixed asset. There should be internal control. Ascertain the location, that is the physical location of the documents of title. Whether sale of assets at branch level have been communicated to HO. If any branch has sold any asset, this should be communicated to the head office. Okay. Next, whether information control exists to ensure reliability on information produced. That means the information that is being produced, for example, any MIS report that are being produced, you have to check that there is no ipsy tipsy with the application. That is, information control exists, that there is no hampering of that. Next is premises. Verify opening balance from fixed asset register. So what premises, basically all your fixed asset, your physical fixed asset, your land, your building, all of this comes under premises. So your verify the opening balance from your fixed asset register. This is called your FAR. So during audit, these are the terms that we generally use. FAR, that means this is basically a book. This is a consolidation of all the assets that the company has. Acquisition of new premises should be verified with title deeds and record of payment. Anything new that you buy, that you have to check with the title deeds and payment, that is ownership documents and payment. Whether balance as per FAR matches with the ledger. Fixed asset register basically just a notebook, or it is a proper Excel where you enter that, boss, I have so many laptops, I have these many computers, I have these many buildings, this is the land, this is valued at yeah. That has to be compared with the ledger. Remember, this is not shown in your books of accounts. This is what affects your books of accounts. So both of them should match. Premises being constructed to be shown under premises under construction separately. If it is being constructed, it has to be shown separately. Other fixed assets. In case of transfer of assets to another branch, ensure that the depreciation, the asset has been transferred, but the depreciation portion should also be transferred. Whether fixed assets have been properly classified or not, current and non-current. In case of intangibles, verify whether requirements of AS 26 have been followed or not. Then sale of fixed asset, verify the sale did ensure profit loss has been calculated correctly. Of course, whenever it is sale, you have to check that the profit and loss has been calculated correctly or not. In case of leased assets, you have to do AS 19, that is leases, and in case of impairment, you have to do AS 28, that is with regards to impairment. Okay, now coming to your last part, that is your other assets. So your last part is inter-office adjustment. So whether inter-branch account means two different branch accounts, they are reconciled at a central level. Interest accrued, recognize only if no significant uncertainty. What does this mean? Only if there is significant certainty about its collectability. That is your AS9, your revenue recognition. Tax paid in advance or your TDS. So ensure that TDS certificate is collected by the branch and your original copy is sent to your HO. Stationery and stamp, ensure that it only includes exceptional items. Okay, when they say stationery and stamps, it only includes exceptional items like your security paper, and this has to be written off over a period of time. Normal stationery is not to be shown here, it is to be taken to P&L. Okay, and next is your non-banking assets acquired in satisfaction of claims. What happened? What happened? For example, you took a car loan. I gave you amount 10 lakhs and you were not able to repay. Now, what did I do? I had given you 10 lakhs, so now I take this car from you. So now this car that I have, it is a non-banking asset. Banks usually don't have cars, correct? So it is a non-banking asset acquired in satisfaction of claim. So I claimed them, so it is a satisfaction of claim. That okay, you are unable to pay the loan, you give me the car. So in such a case, check that the ownership legally vested with the bank because now it is my asset. And asset to be recorded at lower of net book value of advance. Remember, it is net book value of the advance or net realizable value of the asset, lower of your book value of advance or NRV of asset, whichever is lower. That is what at what you will be valuing it. Great. Okay. Now coming to our is this the last part of the chapter? Yeah. Over here our keys start. So these are your 2 pages that we will be covering. Don't worry, quick. So verification of capital and liabilities. What were we doing? We were doing verification of assets. Now we are doing verification of capital and liability. So for capital is verify the opening balance of capital with reference to the audited balance sheet statement of the previous year. So verify opening balance of this year with closing balance of previous year. Stress test. It is designed to understand whether a bank has enough capital to survive plausible adverse economic conditions and to maintain enough buffer to stay afloat under extreme scenarios. That is your stress test. That means in case of extreme difficulties, will the bank be able to survive or not? Next is your Basel III framework. So your Basel III framework aims at improving the bank sector's ability to absorb shocks. That is, for example, COVID happened. So to absorb shocks arising from financial and economic stress. Improve risk management and governance practices. And third is strengthening banks' transparency and disclosure standards. Okay, now there are two types of capital. There is tier 1 capital and tier 2 capital. You'll ask me, sir, what is the difference between tier 1 and tier 2? So your tier 1 is your high quality capital. That is your share capital, your disclosed reserve. This is your bank highest quality capital. That means this is your good capital. And then there is tier 2 capital, which is not so, that is your certain reserves and subordinate debt. Loss absorption capacity is lower than tier 1 capital. Okay. So now you know we have been studied about capital adequacy, capital risk adequacy ratio. So capital risk adequacy ratio has a formula. So eligible total capital funds, eligible whatever total capital funds you have, you divide it by your risk weighted assets and other or and off balance sheet items. Risk weighted assets. So there are some weights given to your different types of items. So your risk weighted assets and off balance sheet items are multiplied this by 100. This percentage should come to minimum 9%. RBI requires minimum 9%. So eligible total capital funds upon your risk weighted assets. So basically this is your capital upon your assets. This should be minimum 9%. This is not just normal assets, it is your risk weighted assets. Okay. Now next is your reserve and surplus. The following to be disclosed under this reserve and surplus is basically divided into 5. First is your statutory reserve. Second is your capital reserve. Third is your share premium. Fourth is revenue and other reserves. And fifth is your P&L. These are the 5 types of reserves. Verify opening balances and any additions or deductions. Whether appropriations from share premium account conform to the relevant legal requirements. Any appropriation, that means any amount that you're transferring from one reserve to another. Appropriation from share premium account. Share premium account has very specified uses that is specified in the law. So you have to make sure that any appropriation, anything that is going outside from this account, whether it conforms to the relevant legal requirements, only and only it is allowed for certain purposes. Okay, now your deposits. So your deposits are basically of 3 types. One is your current and saving account. Your deposits is of 3 types. One is your current and saving account. Second is your term deposits. And third is your deposits designated in your foreign currency. So adherence to KYC norms on sample basis, you have to check whether KYC, that is know your customer, whether that has been done. Verify balances in individual account. This is the normal saving account that you and I keep. So verify balances. Check the calculation of interest, whether calculation of interest is proper or not. Examine the confirmations received. Ensure that debit balance in current account are appropriately included under advances. If there are any debit balances, which means if there is any overdue, so in such a case, it should be shown under advances and not under current and saving account. Verify on sample basis some of the inoperating accounts revived or closed during the year. That means if any inoperative account, that means accounts which are not being used, either they've been shut down or they are active again. So these will be verified. Now next is your term deposit. Term deposit is deposit receipts and cash certificates issued serially. Correct rate of interest for bulk deposits. What are your bulk deposits which are 2 crore plus? Whether foreclosure penalty deducted in case of closure. Verify sum of recurring deposits account opened in the year, and next is your verify correctness of your rate of interest. Okay, now your third is deposit designated in foreign currency. Deposits designated in foreign currency. Verify some of the FCNR, okay, accounts opened during the year. So first you have to check the account. Second, verify permissible credit and debit. So then you are checking the transaction. First you check the account. Second you are checking the transaction. Third, in case of FCNR accounts, examine whether these have been converted to INR since they are in foreign currency. Since they are in foreign currency, non-resident, so you have to check whether it is converted to INR or not. And interest on deposit being paid on basis of 360 days in a year. When you are paying interest, it has to be calculated on a basis of 360 days and not 365 days or 366 in case of leap year. No, it has to be calculated on basis of 360 days. So this was your deposits. Now your next is your borrowings. So borrowings to be shown in balance sheet as one is your borrowing in India and second is borrowing outside India. Now your borrowing in India has to be shown in three parts. That is, first it is from RBI, from other banks and other institutions. So basically two types of your banks. First is your Reserve Bank of India and second is your other bank and third is your any other institution. So borrowing in India and borrowing outside India. Borrowing in India is in three parts. That is RBI, other banks and other institutions. So area of focus in case of borrowing will be obtain and verify confirmation certificates that yes, we have made this borrowing. Examine whether borrowing of money at call and short notice are properly authorized. Only and only if it is properly authorized is it allowed. Examine whether amount shown in branch accounts is properly classified based on security and examine whether clear distinction has been made between rediscount and refinance for disclosure. Okay, we will check the key also once. These all we have done. So now we are at borrowing. So borrowing this, could chocolate be life's greatest bad addiction? Could chocolate be life's greatest bad addiction? CGBLGBA. C. Could chocolate be life's greatest bad addiction? Could chocolate be life's greatest bad addiction? This is your borrowing. So you borrow chocolate from your friend. So could chocolate be life's greatest bad addiction? C is your contingent liability. So we will do the points from there only. Okay, so confirmation certificate, these are all we have done. Then your next area of focus is your contingent liability. So whether adequate internal control, contingent liabilities are maybe not liability. Okay, so whether adequate internal control on transaction that may give rise to current liability executed only, not current liability, sorry, contingent liability. So if there is adequate internal control of certain transaction, because of which or because of such transactions, it is possible it may give rise to any contingent liability. So it has to be executed only by your authorized person. Next, whether comfort letters issued by the bank has been considered for disclosure. And last is test the completeness of the recorded obligation. Whatever obligation they have recorded, whether it is complete or not. Obligation with regards to your contingent liability. Next, claims against the bank not acknowledged as debt. That means claim, that is the person has only claimed it against you. You have not accepted it yet. Therefore, it is not a debt. So you will review the minutes of meetings to identify claims against the bank because this will be discussed in the meeting. Ascertain from the management the status of claims outstanding, that is what are they going to do about it or what is happening. Correspondence with lawyers, claimants, workers and officers, you have to correspond, you have to talk to them. Liability of outstanding forward exchange contract. In case of forward exchange contract, you will verify contract with system generated statements, the contract with system generated statements. Then guarantees given on behalf of constituents. So if you have given any guarantees on behalf of your constituent, that means your subsidiary, associate, etc., ascertain whether there are adequate internal controls over issue of guarantee. That means you cannot just guarantee anything anywhere. When you are providing a guarantee, you will be liable in case that person fails. So you have to check whether there is proper internal control or not. Next, ascertain whether there are adequate controls over unused guarantee forms. Unused guarantee forms, what if I just take a guarantee form, fill it in my name, that case the bank authorizes that in case he does not pay, the bank will pay, and I submit it. So therefore, unused guarantee forms are very important. There should be adequate control for them. Whether expired guarantees have been marked off. That means, for example, if I had given a guarantee for a period of 2 years and 2 years have passed off, so these I will have to mark up in the register that I have to maintain. I'll have to cancel these, that boss, these are no more my guarantees to be performed. Okay, next is acceptance, endorsements, and other obligations. So evaluate the adequacy of internal controls over issue of letter of credit. Internal controls. Okay, so it is your internal controls over issue of letter of credit. Verify the balance of letters of credit from the register maintained by the bank. Next is your bills for collection. These are very small points. Mostly they will not ask you this for exam. Therefore, I'm not getting into much detail. They'll ask you something which has at least 4 to 5 points. Okay, bills for collection. Ensure that the bills drawn on other branch are not included in bills for collection. It is nothing but just one pocket to another pocket because you're drawing it on another branch. Verify outward bills for collection with respect to corresponding register maintained. That is the bill that you have physical versus what details you have mentioned in the register. You will check both of them. Examine the procedure for crediting the party on whose behalf a bill has been collected. So in such a case, you will be crediting that person. Okay. Now your last part of this chapter. I know it was a lengthy video. You must have watched this in 2 parts, or you must have already slept while watching the video. Okay. So last part is your auditor's report to be made to CG in case of a nationalized bank or SBI. So if the report is of SBI or a nationalized bank, this has to be made to the CG. Report shall state the following. Okay, so if you remember, your nationalized bank and SBI both had something to do with CG. One was consultation, one was recommendation. Report shall state the following: whether financial statements showed true and fair view, whether information requested by the auditor was provided, transaction in auditor's notice is within bank's power, returns received from offices and branches of bank is adequate, and P&L shows true balance of P&L for the period. So all of this shall be stated in the report. So these are some points. I will pause one. You can pause for 1 second to read because I have not made anything bold here. But these are the points that you have to remember. This, and this. So basically, these are your 5 points that have to be definitely in the report. In case of nationalized and SBI, it has to be submitted to CG. Okay, next is, if you remember, we did a LFAR, that is your long form audit report. Long form audit report. If you remember, where did we do? Pause the video and try to remember. We did this in your reporting part of your stages. So in the stages, there were 5 stages. In the last part reporting, we did LFAR, that is long form audit report. So it is auditors of public, private, and foreign banks are require the auditors to also furnish a LFAR. LFAR for branch auditor is in form of a questionnaire to be submitted to your statutory central auditor. That means branch auditors, they submit a questionnaire. They do yes, no, yes, no, yes, no, and they submit it to the central. They submit it to the statutory central auditors, who in turn submit it to the management. Copy of LFAR plus board reviews is submitted to RBI within 60 days of submission of LFAR by statutory auditors. So first the branch submit to the statutory auditors, then the statutory auditors submitted to the management, and it is also given to the RBI within 60 days. Pakka last part. Okay, last part of the chapter, then I'm finishing this video. Don't worry, I won't trouble you more. Last part is your concurrent audit. It is important, so please learn this. Concurrent audit scope. So there is your cash deposits. Concurrent audit means doing audit throughout the year. It is not that one specified period. That 1 month you will sit and you will check all audit transactions. Concurrent audit means auditing as and when. So cash deposits, forex, investments, advances, housekeeping, and your other items. So you want to see like what key we have made for this. Concurrent audit scope. Concurrent audit scope key I have made it as, can I drink free alcohol here office? CIDFAHO. Can I drink free alcohol here office? That is cash, investment, deposits, forex, advance, housekeeping, and other. Cash investments and deposits, forex, advance, housekeeping, and others. Okay. So appointment of concurrent auditor. Appointment of concurrent auditor. Audit can be done by bank's own staff or external auditor. That is similar to your internal auditor. Either someone from the company or someone outside. Both of them are allowed. Your ACB shall determine maximum. Your ACB shall determine the maximum tenure of the external auditor. No concurrent auditor allowed to continue as auditor of a branch for more than 3 years. That is maximum. Maximum you can be concurrent auditor for 3 years. Remuneration would be fixed by the ACB. Okay, now your reporting system. There should be proper reporting. There should be proper reporting of the findings of the concurrent auditors. There should be zone-wise reporting of findings of concurrent audit to your ACB, zone-wise. Okay. Before submission of the report, the auditor should discuss the important issues on which she wishes to report with the branch manager and concerned officer. This has to be done before submitting the report. Next, minor irregularities pointed out by the concurrent auditors are to be rectified in a timely manner. That is, whatever irregularity, whatever they feel is happening wrong, they should be corrected. And whenever fraudulent transactions are detected, if any fraud has been detected, they should immediately be reported. Immediately, remember, it is immediately to be reported to inspection and audit department, the chief vigilance officer, and the branch manager concerned if it has happened at the branch. And with this, we are done with our big, huge chapter, that is audit of banks. And these keys are on the Telegram channel. Please feel free to use them for your last day revision. And I'll see you in the next video.